Good morning, everyone. Welcome once again to our webinar on life insurance from the Messer Financial offices of Charlotte, North Carolina. Mark Hunter here. During today's presentation, of course, we're going to be assisting you as agents to find additional support, speak with confidence on perhaps different products, and today a very dynamic presentation on underwriting, as you can see on the board. Something you need to understand as you go about the process of taking an application and walking through the process of actually getting that application approved. A couple basic housekeeping things this morning. Of course, we're going to ask that you mute your phones. If you do hear any background noise, again, that sounds like it's coming from your location. Perhaps it is. So make sure we can take care of that. We're going to also ask that you keep your questions to the question box. You'll see it on the right column of the screen, and we'll come back at the end of the presentation and we'll address those questions. And of course, we do always ask that you stay with us until the end so that you can qualify for the actual bonus that will be attached to sales of these products from Prudential. So with that all in mind, I take this opportunity this morning. It's early, but let's just go ahead and get started and introduce to you again, McCrite King, Regional VP with the Mid-Atlantic region of Prudential. McCrite's been with us before and done a great job, and he'll be with us again. We just scheduled another wonderful webinar with him later on this year in July. So going forward, good morning again, McCrite, and thank you for being here.
Hey, Mark. Thank you. Good morning, everybody. Really hope everybody's Wednesday is off to a great start. It's hump day, halfway home, and I'm sure people are spread out all over the place, but I'm not too far from the Charlotte area in Greenville, South Carolina, and enjoying some beautiful weather down here, and looking forward to the rest of the week. And on a personal note, my wife and I are looking forward to moving this weekend, so wish me luck in that respect. So I've been packing boxes for the past several weeks, and going to be a good time. So probably most of you are looking forward to doing something more exciting than that. But we're going to jump into the presentation today, and we're going to talk about dynamic underwriting. And when I was with the group last time, we talked a little bit about underwriting. We also talked about some product-related things as it pertains to our term insurance portfolio, which term insurance is obviously a big part of what we do here at Prudential in conjunction with the other permanent products that we sell. But we put a lot of pride specifically in the underwriting area of what we do as a company. In fact, our unique value proposition as a company is that we help our business partners thrive by offering dynamic underwriting, enduring value, and customized life insurance solutions. So as you see today, we're going to talk a little bit about the dynamic underwriting and what keeps us competitive as a company, even when we might be in a season that the products aren't as competitive as we would like them to be. Which, hopefully that's not very often. We try to keep the product portfolio refreshed and as competitive as possible. But I think if you were to take a producer or a group of producers and ask them what are the reasons that they do business with Pru and continue to do business with Pru, is that they understand our underwriting, they understand the high level of consistency and the underwriting offers that we deliver, and that ultimately makes their lives a lot easier and the clients that they're trying to serve. So what I'm going to do today is talk a little bit about what the dynamic underwriting means. And to do that, there we go. All right, I thought we had a little technical glitch already, but there's really four categories when we talk about dynamic underwriting and what makes it up. So the four areas, number one is maximum minimum underwriting. This is really designed to help make doing business with Prudential as easy as possible and getting the protection that your clients need as easy as possible. So, the second area is cancer and diabetes. We'll talk a little bit about the competitive rates that we can offer to your clients who have dealt with a cancer diagnosis and been treated and also folks that are living with diabetes and doing a really good job of keeping those conditions in control. Third, we'll talk about some additional niche areas where you'll be able to turn to Prudential to find some competitive advantages. And lastly, we'll talk about exceptional capacity. So if you do come across that career case, that large case that maybe falls in your lap, or maybe you've been working on it for a long time and you don't know where to turn, walking through some of the complexities of a large case, hopefully we can give you some confidence today that Prudential could be one of the companies that you could turn to help navigate those waters. So again, at the end of this, I hope you can understand we're a leading competitor in these 4 areas, and you'll see how working with Pru can be a benefit to both you and the clients that you're out there serving on a day-to-day basis. So let's dive into the maximum underwriting, and I'll share a little bit about what we mean there. So, our goal is to make our products as accessible and affordable to those who need it most, right? I mean, life insurance at the end of the day is about providing death benefit when your clients need it for their families in the event that something unimaginable happens. So we developed this approach through the aid of our proprietary medical underwriting manual, and it's allowed us to maintain a competitive edge by making it as easy as possible to work with us. So the great thing about us having this proprietary underwriting manual is the fact that we don't rely on reinsurance guidelines to help us develop how we determine how we can offer for your clients. We have a very large base of clients at Prudential, over 9 million policyholders currently that we have on the books. So we have a vast sample size that we can pull from and a large client base that helps us be a little bit more competitive and develop our own underwriting guidelines. And what it also allows us to do is make this a living document, something that as medical advances become better and life expectancies lengthen, we're able to revise this manual literally on an annual basis to try to stay ahead of the curve and be as competitive as possible to help your clients get better offers. So just in the past couple of years, we've made some advancements in the areas of cancer and diabetes, which we'll talk about, but several other conditions that you'll find that we're more competitive on today than maybe we were 5 years ago or 10 years ago because of additional treatment options and advances in medicines that are creating longer life expectancies. So just on a personal basis, when I'm at a social function on Friday night and I'm dying to talk about life insurance, right? It's amazing how many situations come up where people will ask, I have a family member that had this and there's no way they're insurable, right? And you start telling people situations where their clients are actually able to qualify for life insurance after having some sort of life event. Most people are pleasantly surprised at how flexible companies have become today dealing with some of the impaired risk conditions that are out there. So one of the other things with the Maximum Underwriting is a crediting system, which you see on the screen. This is available for any face amount, any type of product at any issue age. There's more than 24 different impairments out there that are available for credits. These include things like diabetes, high blood pressure, being overweight, just to name a few. So if you have clients that are maybe dealing with one of those issues and think they're going to not be able to afford life insurance, it might be worth taking a look at that because it has gotten much easier, and it can result in your client moving from potentially a substandard offer up to a standard offer or even a preferred offer in many cases. Additionally, what we try to do here is eliminate what we need in the underwriting process to make that process less invasive and ultimately get your client in and out of the underwriting process as quickly and as simply as possible. I'm sure, as you guys know, if you've written life insurance, the underwriting process is certainly something that no one looks forward to, right? No one looks forward to some stranger showing up at their house and having to draw blood and ask them questions, and you guys having to do that. Unfortunately, we're not at a point, although we're working on it, where we're eliminating more and more of these things. But just in the past few years, we've completely eliminated any sort of treadmill testing that used to be required at older ages for clients that are wanting larger amounts of life insurance. So that was a big win for the industry when we were able to eliminate that. We also eliminated inspection reports a few years ago. So a lot of times when you're going through the underwriting process, someone will call your client, ask them a bunch of questions about their financial situations and things of that nature. We no longer have to do that at Prudential. So if you've been through that process and you've experienced some pain with that, good news, we don't have to do that anymore here at Pru. Also, if you've had a client that's completed an insurance exam in the last 12 months, and they want some additional insurance or they want to change their life insurance plan, they can, without having to go back through the underwriting process and have a new exam done where they draw blood, take a urine sample, all those fun things that they look forward to. They can get away with not having to do that again if they've had that done within the past 12 months. So now we're going to move on. We'll talk a little bit about cancer and diabetes. Obviously, I'm sure everybody on the line has had a personal situation, dealt with cancer, had a family member or a friend that's dealt with this. And of course, diabetes is something that several million Americans are living with. And a lot of those people are managing those conditions better and better today than they ever have been. I was talking to a guy the other day on the phone, and we were laughing about diabetes and how prevalent it is and how often we see it. And it's almost become, if you're an American living in the United States, you're a pre-diabetic just because of that, right? I mean, it's really hard, to do the things that you need to do to live a healthy life and not have some sort of disposition to having diabetes. So, as you'll see, underwriting has gotten better in those regards. So, to give you a couple of specific examples of Prudential and where we've made some enhancements in the past several years with cancer is how we've changed our view specifically on prostate cancer, testicular cancer, and thyroid cancer. So what I'll do is I'll just share with you a couple of examples that we've seen lately where we've actually been able to offer preferred rates on that have been diagnosed and been successfully treated for these three different conditions. Prostate cancer is something that is very, very prevalent. Not to get too personal with you, but just had a father my dad who's 68 years old, was recently diagnosed with prostate cancer, and very fortunately they caught it early, and he's scheduled to have the surgery here in a couple of weeks. It's just one of those things that if you're in the life insurance business long enough, you're going to come across somebody that's dealt with or dealing with a prostate cancer diagnosis. I think, in fact, 1 in 3 men by the age of 70 will either be living with prostate cancer or have a diagnosis or something to that effect. But good news, just to give you a quick idea, we had a situation a few months ago, but a client that was 62 years old when he was diagnosed. His Gleason score was 6, and his pre-treatment PSA was less than 10. So that's going to be considered a very low-grade cancer. It's confined to the prostate. They've caught it early, which is great. Had the radical prostatectomy completed, and within a year, we were able to offer preferred rates on that case. Additionally, testicular cancer, if they catch it early, it's been treated successfly. Within 3 years of that surgery being completed, we could go preferred on that situation as well, too. So in addition to those, thyroid cancer is another situation where if we catch that cancer early on, it's a stage 1 cancer, diagnosed, treated with surgery. Of course, there's regular follow-ups documenting the progress. That's another situation where we can go preferred on a cancer history. There's still some cancers that we're not quite there yet. Melanoma being one of those. We come across that a lot because we know that skin cancer, unfortunately, is very, very prevalent. So if you've had a client that's had a history of melanoma, for example, we can go as high as non-smoker plus, which is a standard rate, our third best rate. But we're not quite seeing folks getting into the preferred categories with melanoma. That's one of those cancers, unfortunately, it's pretty bad. There's a high prevalence of reoccurrence when dealing with melanoma. But who knows? We may see ourselves and other companies come around and be able to look at that a little bit better. But also, and certainly not any lesser of an issue than any of these other cancers, but breast cancer is another one that faces many women in this country. And we've updated our guidelines in the past 2 years, actually, where we can go as high as non-smoker plus with folks that have had a history of breast cancer. Again, that's going to be early stage, not spread outside, not in any lymph node involvement or things like that. So, just keep us in mind. I guess at the end of the day, the bottom line is if you have a client that has a cancer history, they've been successfully treated, don't give up on that client. We might be a company that will look at them favorably in spite of having a cancer diagnosis. Moving on, diabetes, again, something that millions of Americans are dealing with. And several years ago, within the past 5 years, certainly the past 10 years, if you had diabetes and you're living with that condition, regardless of how it was being treated, you were probably going to be in some sort of mild to moderate substandard rating, ultimately paying 150% or 200% of what the standard premium is for your life insurance. But with treatment options and people managing these conditions better, we're now seeing clients get non-smoker plus rates with Prudential if they have good control of their diabetes. So that's going to look like a client that's a little bit older. They've managed this condition for 3 or 4 or 5 years. We're able to go back and look at their doctor's records and see that their A1C levels have been well controlled, somewhere in the neighborhood of 7 or less. So if you have a client that's dealt with diabetes, they're obviously going to know what their A1C score is. So if you ever hear that it's 7 or less, they may be a great candidate to get a very competitive offer living with diabetes. So for example, had a client recently, 58-year-old gentleman, has had diabetes for 4 years. He's treated with metformin, which is an oral medication. He's got excellent control of the diabetes with an A1C of 7. Good blood pressure readings, 130 over 85. Good cholesterol levels, normal build. Because of that excellent control, we're able to go to non-smoker plus on that particular client. So again, if you have somebody with diabetes, definitely want you to think Prudential is a place to go to help out with those cases. And even if you have clients that have really high A1C levels, I've seen us offer on levels in excess of 10, which is pretty high. Those aren't going to be your standard cases, but they might qualify for a low substandard rating, which, of course, would be better than the alternative of not being able to get coverage at all. So let's move on. We'll talk about the progressive niches that we have here at Prudential. There's a couple that I really want to focus in on, but some that I'll mention to you that you may think of Prudential for out of the gate is our view on tobacco. I mentioned this on our last webinar. This is an area that we certainly are a market leader in how we view tobacco in terms of the ratings that we can offer to your clients. So the easy thing to remember with Pru is that any form of tobacco other than cigarettes, we will offer a non-smoker plus classification to your client. And so that's huge because you're talking about a 30 to 40% savings to your client. So you could have a client that smokes a cigar every single day of the week, and they would be offered at a non-smoker plus rate versus a smoker rate. Same thing goes for smokeless tobacco products such as dip and chew, any sort of nicotine gum. We're also going to be able to offer non-smoker plus in those categories, saving your client a lot of money. Another area that we have recently updated our guidelines on is marijuana usage, which we do come across quite often, especially with several states legalizing the use of marijuana. So you can now have a client that admits to using it 3 times per week. They can test positive on their exam, and as long as they admit the usage, we can offer non-smoker plus to those clients as well too. Now, if they're using more than that and they admit to us, there could be some ratings involved. And if they're using daily, that's probably not a case that we want. Might be hard-pressed to find a company that's going to extend an offer in those situations. But 3 times a week, recreational use, not medicinal use, 3 times per week. They admit to it, they can test positive, and we can still go non-smoker plus on those particular clients. Also, just in the progressive niches category, I'm not going to go too far into this, but we have arguably the most competitive bill charts in the industry, and it kind of goes hand in hand with the diabetes. You know, we've got a lot of people in the country that are a little bit short for their weight. I probably would fall into that category somewhat myself. So if you have clients that are a little bit overweight, still looking for a competitive rate on their life insurance, we may be a good company to turn to because of the competitiveness of our bill charts. So just to give you a little flavor there, you can have a client that's age 60, about 6 foot tall, and can weigh close to 300 pounds and still qualify for our non-smoker plus rate, which is our 3rd best rate. So that's a pretty lenient scale when you're looking at height and weight. Additionally, some other areas when you're looking at avocations such as piloting or scuba diving or things of that nature, we're really at the top in terms of competitiveness on those type of dangerous, if you will, avocations. So another area that Prudential might be able to help your client get a good offer. A couple of the progressive niches that I'll hit on that you may come across often as well too when you're working with your clients is coronary artery disease, especially with the older ages. We see a lot of this. So if you have a client that's dealing with CAD, it's a mild case. Maybe they only have 1 or 2 arteries involved with the CAD, good heart function, things of that nature. I've seen us go as high as preferred on some situations where we have good follow-up, good cardiac function. They've had testing that shows this in addition to what we require as an insurance company. We can put out some very favorable offers in those scenarios. The other progressive niche that we come across some, not quite as much, but elevated liver enzymes. So there's several different liver enzymes that are tested for in the insurance process, about 5 to be more exact. So you can have some pretty high levels. You could have one of these enzymes being 4 times the normal levels. We could still go preferred best on those clients. You could have 2 to 3 of these tests as high as 2 times the normal limits, and they could still qualify for preferred best. So these things kind of pop up. It's one of those things that people really aren't aware of more times than not, but they rear their ugly head during the insurance underwriting process. Unfortunately for us, we're still able to work with these and give your clients some pretty good rates, even if they're dealing with an issue like this. And lastly, we'll talk a little bit about exceptional capacity. This will just give you a little bit of a flavor as far as where we are with our retention limits. So I wish that I could tell you guys that every day I spend all my time from 8 to whenever, working on $20 million cases. Unfortunately, I'm not that lucky, although I would, certainly love to do that. But we are a great place for you to go if you do have a large case, and maybe you're unsure of how to handle the large cases. Prudential is a company that, we are used to working through these cases. We have over 250 underwriters at Prudential, and they average about 18 years of experience. So if you have a large case and you're nervous about how it's going to be handled, I'd want you to have confidence in Prudential to be able to walk that case through. As you can see, on our own paper at Pru, we have $20 million of retention on single life products and survivorship products. If we are in a situation where they need more coverage than that, and we have to go out to the reinsurance market, we can bind our reinsurers up to $65 million without getting their sign-off. So that's one of the largest in the industry that we can go out there, we can bind the case, and not have to get permission from our reinsurance partners to do that. We actually can go over and above that up to $80 million using up to $50 million with one facultative reinsurer that we have on board at Pru. So bottom line, to make that real simple, if you have a big case and you're not sure how to handle it, have confidence that Pru will be able to walk you through this process. You can speak with the underwriters directly to understand what it's going to look like and what's going to be required from you and your client to get these larger cases through the process if you do find yourself working on one of these situations. So let's just do a quick recap here. We talked about 4 areas: maximum underwriting. We really are just trying to make it easier and easier to help you grow your business, diversify your business, making the life insurance process a little bit easier. I think in my experience in working with financial advisors, health insurance producers that are trying to segue into the insurance industry, one of the barriers is not understanding the process, not understanding the underwriting process, and just having the confidence that we can make it as simple as possible. We talked a little bit about cancer and diabetes and our competitiveness in those areas, some of the progressive niches that you want to keep in mind when you're thinking about companies to take your case to. Obviously, the tobacco is a big win for us many times, but certainly some other areas beyond that. And lastly, we talked about capacity, and that's just our ability to help you navigate the large case marketplace if you find yourself working in those particular markets. So I hope this has given you a little bit of a flavor of Prudential and how we can help you in the underwriting marketplace. Certainly, we didn't talk as much about product today, but as Mark mentioned, later on in the summer, later a couple months in July, we're going to talk a little bit more about policy review and give you some things that arm you with some things that can help you approach your clients to help generate some of these conversations and get you a little bit more comfortable about some of the products and offerings that we might be able to help your clients with. So with Mark, that wraps up the presentation, and I'll back over to you, sir.
Well, thank you very much again, McCright. Wonderful information session for us. Also, a great review. I usually take a few minutes here at the end to go over some of those bullets, and I think you did a great job just bringing us back up to date. Obviously, as you are all aware, yes, diabetes and cancer are a frequent circumstance you're going to run into. I think many of you know, if you've called into me and we've reviewed particular cases and tried to determine where we might go, I think a lot of times you'll know that I've said right back to you, just put that app into Pru. Let's see where they come in with it, because I'm going to bet they're going to give you the best opportunity to get the coverage that you need for that client. I think also, McCright, you hit on the point a couple of times, and some of the agents might not quite understand. Could you just give us a brief explanation of what reinsurance is?
Right. I'll give you the 30,000-foot view. And essentially what that is reinsurance gets involved in a few situations. Most companies, when they write a policy, for example, let's just say it's $1 million term insurance policy. Your client's going to go through the underwriting process with Prudential, but essentially what happens beyond or behind the scenes once it's done is most companies, really the majority, I would say 99% of the companies out there, are going to cede some of that risk to a reinsurance company. And this just helps them diversify their book, and essentially it puts more than one party on the hook for that $1 million payout, if you will. There's a few of these reinsurance companies, probably 5 or 7, very large companies, and this is what they do. They manage risk for a living. When you have larger cases that are in excess of a company's retention limits, a company will go out to these reinsurers and they'll share the case file with these reinsurers. They'll make sure that they're comfortable with the risk. And essentially what that allows the company to do is not only use their internal retention, but also the retention of these reinsurance companies. So if you have a case that's 50 or 60 or $100 million of coverage, which again, we don't come across every day, but when we do, we're going to split up this risk so that one company is not on the hook for $50 or $100 million.
Excellent. Thank you very much, McClight. Here's one of our questions from one of our agents out there in the field, Franz. He's asked that you mentioned you don't have to go over the medical if it was done in the last 12 months. Would that only be if they have a policy currently with Prudential, or could it be if they're coming over with an exam from another company?
That's a great question. It does not matter where the exam was completed. Most insurance companies are going to use one of 3 or 4 examination companies. So, for example, if you've had an exam done with John Hancock and now they want to add additional coverage, we could use that exam and be able to make an offer at Prudential. So just to tack onto that a little bit additionally, let's say that you have a client that you underwrite today with company A, and you get an offer 3 weeks from now and it's not what you were hoping for, we could absolutely take that exam, look at it at Prudential, see if we could compete, make a better offer. And likewise, if you did that at Pru and wanted to go somewhere else, you'd be able to use that exam at the other company as well. Does that answer the question?
Yeah, that's great. That's great. Again, from the same agent, he wanted to know if the webinar was recorded, and yes, it has been. You'll be able to go back onto the Messer website to our training session there under Agent Resources, and you'll be able to log in and pull that up. As far as sharing it as a PowerPoint, this is really meant for financial professionals, really to be used as agents. This isn't something you're really meant to put on the table before your clients. Let's see, we have a question here. Would the underwriting guidelines apply on policies exchanged with different companies?
I'm not, well, let me...
Yeah, I guess that question is really, what is the policy, if any, for exchanging like an American General or currently a Genworth, let's say, for a Prudential policy?
Right. So if you're referring to doing a 1035 exchange from one company to another company, so if you've got a permanent policy and you want to exchange that for another permanent policy at a new company, whether that's Pru or anybody else, you would have to go through the full underwriting process. So if you have a policy that, let's say, has been enforced for 10 years and you want to replace that with another policy of Prudential, they would need to go through the underwriting process with us to determine the rate classification. Now, the one thing I'll say is that because underwriting has gotten better in the past 10 or 15 years specifically, and mortality tables have changed, making insurance premiums lower in a lot of situations, you might be able to get your client a better rate today than they even qualified for 10 or 15 years ago. So even though they're older, you might be better off doing that exchange, but they would have to qualify for it medically at the new company.
And I think if you're looking at some of the exceptions of what was talked about this morning, a real good example today would be the electric cigarettes. I don't know of any company besides Prudential that's going to get that person that non-smoker rating. All the other companies are even going to consider that electric cigarette a cigarette.
Correct.
So that'd be a great one to look at as a possible change from one to another.
And Mark, another thing that we see is policies that were issued, let's say, 2000s and before. A lot of companies didn't offer preferred or preferred best rate classes. They had standard, and that was the best you could get. So today, a lot of companies now obviously have preferred and preferred best rate classes. So your client might qualify for something even better than what they originally qualified for because of those enhancements.
Yeah, very, very good point. And Marilyn again has a question about prospects for large face amounts. I don't understand quite who are the target prospects.
Right.
Right. I mean, really, go ahead.
I could maybe give you a little bit of a where we see the larger cases coming from. Certainly it naturally is going to be in the older age market. Clients that are 55 and up. The estate tax planning marketplace is not what it used to be. Of course, a husband and a wife today can have nearly $11 million that will transfer without any sort of estate taxes. There are some people that have estates over that where they need life insurance to hedge against the future possibility of estate taxes. However, where we see a larger case opportunities is people at the older age that have IRAs and qualified plans specifically that are really not needed for retirement income. And so instead of leaving those assets that are going to be taxed very heavily at death, one strategy that we see a lot is repositioning those distributions to purchase life insurance that's going to transfer estate and income tax free. So that's really an area where we're seeing a lot of larger case opportunities at the older age markets. And then, you combine that with some of the things that we talked about today and being able to get competitive offers for your older clients that might be a little bit banged up, if you will. A lot of times we're able to create some really strong leverage using life insurance to help people create and protect the legacies that they want to leave to their families.
Good. Thank you very much. Another question, and actually the question leads into the process of becoming appointed with the company. If you're not currently appointed with Prudential, please access our contracting tool on the Messer website. Get that started. I do believe, though, with Prudential, we need to have an application to process the contract. So we need to kind of do two of them simultaneously. And once you are contracted, yeah, go ahead, McCray.
I'm sorry, I was saying that's correct.
I think that's
spot on.
Yeah, that's correct. So make sure you do that, and then if you do need some materials, which is where this question came from, we'd be glad to share with you the basic materials that are available for your clients to review while you're in the process of getting that contracting done. And just call back into our office or email back into our producer support at Messer Financial, and one of the account managers there will pick that up and let them know you're looking for some of that material, and we'll be able to send you the PDFs right from the site. Again, I think you'll find that in the past I've fallen back on Prudential a number of times talking with you as agents of where to take it, and also I'll just tell you personally, I've taken advantage of the leniency in the underwriting of Prudential numerous times myself. So don't let it lose focus from your process of carriers of choice. And again, that's why we have these webinars, to let you know there are alternatives. If you're new to the business or just trying to get started, it's always a little scary and a little shaky. But again, that's what you've got us for, whether it's calling into Messer or calling even into McCray. I mean, he's out there. We've many times called him back while he's on the road and doing things in other places, and he'll be there for you to help you, get your questions answered and help get your processing done. But final thing, of course, always we like to talk a little bit about the bonus we'll offer you. So again, because you took the time to be here with us, because you registered in advance, I think you're going to find that, if you go out there and write a case, it's going to be pretty smooth transition. And by doing that in the next 30 days and having it issued in the next 60, as well as earning your commission, Messer Financial will pay an additional incentive bonus to you of $100. So take advantage of that. Only one time. I mean, it's great. Go out there and write the husband and wife, but we're only going to pay the bonus on one of those two applications, and then add the 3 kids and bring yourself in 5 applications and see how wonderful the life insurance business can be. Get them under your belt. You'll lose your fear of doing the right thing, and you'll start to enhance your income. I don't see any other questions, so with that in mind, I thank you all for joining us. McCray, thank you very much. I look forward to, ladies and gentlemen, as he touched on, we're going to do a great one in July. Going to talk about going back in and seeing clients who perhaps have life insurance with another carrier. That's the policy review process. That's what's going to help you get in the door and write some additional business. So again, thank you very much, McCray. Have a great week.
Thanks, Mark. Thanks everybody for attending.